All right. Good afternoon, everyone. Hope you're doing well. Here we go. Another market report for the week ending in December 2nd, 2022. If you are on YouTube, please hit the subscribe and like button. And on this video, I really appreciate that. So let's go and get started. I'm going to go through some of the major news that occurred this week. I'm sure you already know it, but I'll go through it with you. And the first off is the rally this week was set off by none other than Papa Powell coming in dovish at the Brookings conference on Wednesday afternoon. So the entire market, the whole week was just waiting for this speech and his remarks about the inflation, labor market, and all that. And I think the one statement that really set the speech apart from, say, a Jackson Hole Powell, okay, if you remember on August 26th, is I'll give you the quote: monetary policy affects the economy, inflation was uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. And then, of course, the next December meeting of the FOMC starts on the 13th, which is the day of CPI release. The 14th is when they'll do the whole press conference and their rate decisions. And most likely at this point, the market is loving the comments. Not only that, but also pricing in a 50 basis points. I wouldn't call it a pivot, but definitely a little bit of easing. All right. He also said in his comments throughout the Q&A that he was slightly worried that the impact of the rate increases or the tightening faster, all right, may affect the macroeconomics throughout the world. And we're starting to see that throughout the world, right? And the earnings recession may not come this year, but it's definitely, in my opinion, might come next year, because if inflation is a lagging indicator, okay, these rate hikes, like he said here, it's going to be felt in 2023. Now, if you're part of TRT, I'd mentioned this over the last 48 hours, is that I believe the bottom is in for 2022. So hold on, before you misquote me, I think the bottom is in for 2022. We will have to see what Q4 earnings season looks like for your S&P 500 companies. Okay, a lot of analysts, Morgan Stanley, Goldman Sachs, a few other major bears out there, they're saying that you're going to have a flat earnings, flat growth in 2023. All right, and the SPX will stay below 4,000 or right at 4,000. There will be no growth. Okay, and that sounds a lot to me like stagflation. Let's worry about that next year. Let's focus on what's going on today. All right. As you know, other news, big news this week was the non-farm payrolls. All eyes after the Powell pump was moving over to the non-farm payrolls, and it came in 263,000 above last month actual results and above forecast. And as you saw this morning, the market did not like that. We'll just go to the Qs. The Qs went from 293 down to 286 in one candlestick. But guess what, folks? We recovered all of it at the end, most of all of it at the end of the day. So you pretty much still have a green week throughout the indexes. Your Dow Jones, your NASDAQ and S&P 500 and your NYSE and all that. All of them ended up green on the week. All right. So that's the scoop for the week. I'll go to the charts in a second here, but give you what's going on next week. All right. As we move into the week of December 5th, I'm not seeing a ton of data. I do believe that the Feds are going into quiet period. All right. So you may not, so I believe that's accurate. So you're not going to hear from them next week, at least the voting members, okay, of the FOMC. But you do have ISM, manufacturing business activity, and some PMI. All right. That might move the markets on Monday morning. It's at 10 a.m. Eastern time. But I think the big news next week that everybody will be waiting for is the PPI. Now, this is the producer price index, and this is another big one that the Feds take a look at. All right, so that's going to be 8:30 a.m. You're going to have core PPI year over year 5.9 expected. PPI year over year index 7.2. That was, I believe, that was the last month reading, right? Oh, sorry. Last month was at 8.0. So it did come down. Now it's at 7.2 forecast. Now, I don't know if you've been paying attention. All right. Now, this is the producer price index. All right. So the producer price index is obviously the cost of producing goods. Duh. All right. Have you seen the latest gas prices coming down? Okay. Here in California, I filled up yesterday at 485 premium in my SUV. So that is really good news, not only for my wallet, all right, but for everybody's wallet. Okay. And that can be a slight, I mean, for me, because energy is such a big part of the CPI that we have to take a look at that, right? I mean, I do think the CPI is going to come in low come December 4th, 13th, okay? But let's go ahead and look into the PPI that will be released next Friday. If it's under 7.2%, watch out, folks, okay? That's a good indicator for CPI, all right, going into December 13th and a subsequent December 14th FOMC release. All right. So with that being said, everyone thought that we were going to just be bearish today, right? At the beginning of the morning, when I saw that drop, guys, I if you guys are a part of our group, I mentioned on our live stream, look, guys, I have seen days where we dip so hard and the market rips. And I said to everybody, this is going to be kind of an October 13th type of event. If you remember October 13th, we hit a new yearly low at 254 and screamed all the way back up to 268 intraday. Okay. Now, today wasn't like that. Okay. But it was pretty darn close. We dipped to 286 and never looked back. And the market actually closed. I mean, if you look at this candlestick, it's a bullish candlestick, even though we have kind of an evening star on the Qs yesterday. But that was because, well, you know, the market was looking forward to NFP report. Now you got this bullish candlestick. We close above the 90 EMA clouds. All right. We close above the support at 288 for sure. Okay. And so next week, guess what, folks? We have pretty good volume today, too. There's still a gap up here at 302, and eventually the moving average, downward sloping moving average at 305 now. I do think we're going to break at least Thursday's high, which would be 295. And you're going to cross into this area here back in September where we chopped it around at 296. I think we're going to hit that next week. All right. And we can overcome that. I do think it's like SPY, right? SPY crosses 400 and it takes a major event for it to bring it back under 400. But the market looks at the 400 as psychological support. Okay. At some point, the Qs are going to catch up to that psychological resistance at 300. All right. As long as SPY hangs on to their 400 level. So if you look at SPY this morning, all right, our handy dandy 30-minute chart, SPY hit exactly 400 right on the money in the pre-market and never looked back. Okay. So with this kind of support that's happening in the market, I can't help but to be temporarily bullish, at least for the next several days. So my upside target, given that, hey, this, you know, the chart, the price action and volume, it looks pretty good. I do understand that your stochastics is very high and your CCI is as well. But listen, folks, we hung out in this area back in August. So there is some strength in this market. I do think we're going to continue running up. I do think that, once again, the bottom is in for 2022, but definitely not in 2023. So I'm going to say that my upside target, real easy, is going to be 296 on Monday. All right, 295, 296 Monday will be tested, and then we'll go from there. If we break that, I'm going to put the target at 300, exactly 300. I think there will be some psychological resistance there. I think the market may pull back for that 300, but certainly there's some magnetism going on. Once you cross over 300, that moving average daily of the 305 is going to be a magnet. Okay. So we'll see what happens, but I'm putting a target of 296 and 300 for the Qs going into Monday. Let's take a look at the weekly chart real quick here. You can see that The only thing that's going to be scary for the bulls is that once we cross into 300, that's literally where the trend line resistance is since the beginning of this bear market. Okay. Actually, let me switch back to my SPX charts here. Okay. So this is your daily SPX chart. All right, it's a line chart. This is VIX. VIX actually closed under 19 today. Pretty insane how the VIX just got hammered today, beyond my wildest dreams. Okay. Last week, I know what I said. I said that VIX is oversold, equities overbought, we're going down. Didn't happen. All right. Powell changed the landscape big time. But SPX, if you hit that 4080, today's high was 4087. No, I'm sorry. 4080, hit 4080 today. So it filled the gap from this morning. All right. But we're still stuck under this trend line. If we can break through 4080, 4090, then we start peeking through this trend. Okay. So that's something to look out for the coming week as well. So PPI might be the big one. All right. Maybe we're going to consolidate for the next couple days. We'll see. All right. But let's go ahead and jump into the SPYs. All right. Your SPY, look at the weekly volume on SPY. Not bad. Right. I know last week was short week. Totally get it. But we're back within trend in terms of 20 SMA moving average of volume. Okay. So that's a positive thing for the SPYs going into next week. You have a decent hammer. Okay. Maybe you can call this a hammer as well. A candle here. You have this is the, I believe, what do I have this? This is a 50 MA, right? Yep. So that green line right above you see there was rejected back on August 15th. Nearly rejected around this area, okay, April 4th, and we're coming up on that SMA 50, which is 412, okay. We hit 410 this week and pulled back to 400, and we recovered to 407, so that's really interesting. All right, so let me go over to the daily. I'll give you my kind of a rundown here. Good volume, all right. Yes, it's not like December, October 13th volume, but you still can't beat the volume, all right? It's still pretty decent for a Friday, all right? So we have some volume gaps here, okay? You have some supply of 412, which is exactly what? SMA 50, all right? So I'm going to put an upside target, all right? I'm going to put an upside target. If we break the prior resistance of 410, all right, I think we're going to hit 412 right into that supply. Okay, because you got a volume gap here. You got very good support here. You got very good support at 400 as we saw today. This was our upside target this week at 404, so we surpassed that. That was easy. All right, I'll remove the downside target as well, but I'm going to put an upside target of 412 going into next week, and that weekly SMA 50 should be tested going into the week here. Okay, so you can see we rejected from the highs of September and right around the support area back in August before the big Jackson Hole speech. All right. So you can see that this area here is another level where the bulls generally fight pretty strong. Okay. Once we break this 410, 412 is could be a nice call. All right. Maybe 412, 415 calls. Okay. All right. So that's all. I'm just going to cover the SPYs and the Qs today. And I hope you guys have a fantastic weekend. It was definitely a great day for all of us and for everyone in TRT. Welcome to all the new members coming into TRT in the last couple of weeks. We appreciate you. So I think that's it for me, and have a great weekend.